All right. Welcome to Mortgage Update, weekly mortgage update. We are joined today with Bart Maldonado with Supreme Lending here in the Alpharetta area. So, we've got a lot to discuss. So I'm going to we should just jump right into it today because I think we've got a lot to cover. Uh, so,
Absolutely.
so Bart, since the last time we met, tell us a little about what's going on in the markets. We're seeing a lot of, obviously a lot of geopolitical tension. And what does
Of
that
course.
mean for the average consumer? And what does that mean for us?
Yeah, it's right now we are closely watching what's going on in the situation with Russia and Ukraine and whether or not they'll invade. And you may think, how does that affect mortgage? Well, a lot of what affects mortgage is like the 10-year Treasury bond, but also like mortgage-backed securities, and it's sad to say a lot of people invest in American mortgage debt. It's very consistent. It's always there, and so it's whenever there's big, huge international occurrences, specifically with like European, economics or things that can shift the world market in many different directions. That can have a great effect on what goes on with mortgage-backed securities and people that invest in that.
Yeah.
And so they'll take their money out of one thing and then put it into the other because of what's going on. So basically, the basic theory is right now that if Russia invades Ukraine, we're going to see a temporary rally in the market, probably for about 2 days. Where rates are going to dip for a very short periodic time. It's one of those things, we have, obviously nobody wants anything, doesn't want war. Sadly, in this case, it would benefit mortgage rates for a very brief periodic time.
Yeah,
Also, right?
Yeah, it's funny that it's great that you say that and we bring that up because as the geopolitical tensions they do change, a lot of investors that we forget sometimes as a consumer that our funds do come from other consumers out there, the American people, investing in mortgage-backed securities and having those different tranches of how does that look, and it's a very secure way of investing since our last real estate crash of 2008. What things have changed, banks have changed quite a bit, but it's a good point though to really kind of bring that up.
Well, it's just one of the things I think that, sadly, anything that occurs in the world can have an effect on money. And so in the end, like anything else, it all depends on what side you're on as far as what goes up and what goes down and where your money is and what you invest in.
That's
And in this case, with rates, rates took a big skyrocket on Thursday, higher than we have seen in years. So like right now, base par rates probably somewhere close to like 4.125 to 4.25. Which is really high considering where we were, even a year ago.
Yeah.
It's one of those things I constantly remind my clients is that it's not the number that's actually moving; it's the cost of that specific rate. Like a 3 right now would cost you like $30,000, get 3% interest rate, versus a 3 a year ago would probably cost you $2,000. So it's really the cost of the specific rate. So when people say rates are going up, it's the cost of each individual rate. So.
Right. So it's real important just to have a good strategy in place, have a good understanding of what is the cost of money going into when we're sitting down, sitting down with you, Bart, on our initial consultation. What is the cost of money? What is the best strategy to go to make that happen? Because we see home prices are increasing, cost of money is increasing, inflation is increasing, right? These are natural cause and effects of our economy. As the economy expands, things get more expensive. As our economy starts to contract again, obviously things go a different way. So the federal government, obviously there just to help regulate our economic standpoint from there.
Yeah. No, I think one of the things I keep reminding everybody is that the big question more than anything else when it comes to what interest rate that you get or what it is, it's and what you pay for. It's all really the main question for me is all about how long are you going to be in the home? The longer you're going to be in the home, the more it makes sense to get the lowest interest rate. If you're going to be in the home for a short period of time, ARMs, which are adjustable rate mortgages, which are possibly coming back, and they're already coming back to a certain extent. So those are things that will, that's really why, I always recommend someone work with a reputable lender as opposed to just even an online person, because when you talk to a real human being that can say, hey, what is your economic situation? What are the factors that are going into the decision why you purchase this home? And let me guide you to what these options that you may not know are. So.
Right. Yeah. No, it's a great point. Everyone needs that human touch, right? We can always go online. Heck, we can go online and buy cars, but like I say, how does that car run? Do we really know what you're getting until you test drive? Do you like the way it fits, your body? Does it like the way, are we driving a BMW or are we driving just a Volvo? I mean, even though they're both German cars, they're going to fit and feel a little bit differently, right? And that's something that I think we need that human touch there. Same with real estate, same with mortgages. Really having that personal connection is
100%.
paramount, especially today.
Absolutely.
So, another question I have, and I like to make this scenario based, right? I'm a 40-year-old entrepreneur, right? I left during COVID. I left my job, making a 6-figure salary. Now I'm out here crushing it in the last 2 years. But now I'm ready to move up. I'm ready to kind of get into a bigger home. What do I need to do? What should I be looking for? I've had positive cash flow. What does that look like for that type of lender?
I think when people are looking to move up, I will always stress, and I've had an example after example this week, credit is truly king. And credit doesn't mean not spending money on a credit card. It doesn't mean not taking out loans, because remember, what really drives your interest rates and drives anything positive that you want to do with a loan when you're purchasing a home. It's all about the credit score. Really guides everything. So if you have a high credit score in the high 7s and the 800s, you can really push the limits of your debt ratio. As far as for approval, you can push the limits of everything. Your reserve funds, your credit score is king. So it's really the advice I give to anyone that's looking to step up or even become a first-time home buyer is just don't forget that your credit is so paramount in this specific process, because it allows, like, anything that pops up, but then anything you didn't think about, it really allows, it gives the most freedom with getting approved. If your credit score is high, you can just get away with anything, because it shows that you're a responsible person that can pay money back. So
yeah, no, I agree. Yeah, the credit is definitely, it's the risk they're taking, right? That's the higher credit score, the more trustworthy you are, the less risk a bank and the lender is going to have. So it reduces the rate. So yeah, very, very good. The next part I wanted to kind of go into and transition to, this is fairly near and dear to my heart, being a veteran, serving in the Navy for 10 years, a little shy of 10 years, is the VA loan. I have a VA loan in my house. It's a great program, personally. So this is something that I think that sometimes in this current market is being overlooked. And I almost feel to the point of I don't like it, and I'm just going to leave it at that. But I think there are ways that veterans can still use this loan, because it's a powerful tool that they have available to them, that they've earned and fought for, and should have the right to use. So if you could tell us a little about your VA loan process and how it's working for you or for consumers.
For me, it's something that we addressed a couple of years ago, and especially as the market had changed. How do we, first of all, it's an important understanding, and if not everybody knows this, is that you don't have to use a veteran lender like a USAA or a Veterans United. And nothing against those companies. Obviously, they're competition for us, but it's they have no affiliation with the U.S. government. You don't have to, like Navy Federal, whatever. You don't have to use any of those. For a VA loan, they can do VA loans, they can do conventional loans, whatever. Obviously, they like to promote that they focus on veterans because they want to kind of filter it through. But it really, any lender can do a VA loan. The VA is a separate organization, and then they, just like us as a lender, they partner with them to get the deal completed. So that's number one. Number two, it is, this is definitely a pet peeve of mine. I mean, you've spoken about it before, is that I hate that veterans are looked at like VA loans and VA offers. When you have a house that's getting 20 or 15 offers, right? And the VA offer is almost like put in the trash can before it's even reviewed. And why? I think that's here's why I like the VA. Number one, the people think that the VA appraisals are so much more stringent than conventional or an FHA appraisal, and it's not. There are some things that any appraisal is going to catch: the safety of the home, the deck being split and torn up, drywall holes being any loose wires. Like any appraisal is going to catch that. Conventional is not like a guy with a blindfold walking around going, "Oh, it looks good," and then put the value on and out the door we go. They're all, like they're really not huge differences between the three. And so
they're designed to protect the veteran, right? If you're missing a handrail, and this has happened in a few of my listings where, hey, there's a handrail missing, and we've had a veteran loan, we accepted a veteran loan on the deal, and they're missing handrails, and it makes sense. It's a safety concern. It's a safety
absolutely, 100%.
I've seen that twice actually.
I've seen that a couple of times. Absolutely. And it's just one of those things. It's, for me, I think that, I'm not a veteran, but a lot of my family members are, and I think that it's just a shame that they shouldn't look down upon that loan. And here's why also I like the loan program is conventional has very strict guidelines. But FHA has the most strict guidelines of any of the loan programs. And while VA has its own specific weird guidelines, like you have to have a pest inspection, it's just everyone has to have them as part of it, or termite bond, right? Mm-hmm. And so even though that's part of a VA, but the truth is, like, the VA has the most flexibility of any underwriting programs. It's because they're meant towards benefiting the veterans. So they can take letters of explanation. They can take the scenarios that may have existed with something and say, okay, we're going to go ahead and give it a pass on this one because it makes sense because it's something that happened. I guess my point is that there's so much more wiggle room with VA underwriting guidelines than there is with anything else, specifically even FHA.
Yeah.
So I love that. I love that program. There's more opportunity to find paths to success to get the loan approved and finalized than there is any other loan program. So that's really cool. And then on top of the fact that it's, it is, once again, think about all the freedoms that we enjoy, and we enjoy because people like you, and thank you for your service to our country.
Oh, well, no worries. I always say thank you for allowing me to serve the country. I had a great time over my tenure in the Navy. That's for sure.
It's just one of those things. Like, I don't think that we should penalize, these great men and women who have some of them have lost legs and, also other things, to fight for us. That they should be given the right and the opportunity to purchase a home. Now I will say, to take all that, and the biggest stigma beyond anything else, while listing agents don't accept VA offers, is because of speed. Because, for example, a lot of the lenders that I mentioned, their closing time because of processing, and a lot of it has to do with the fact that the appraisal leaves our hands and then goes into the VA's hands. And right now the portal says 10 days. So a VA appraisal will take usually anywhere between 8 to 10 days. But right now the VA is saying maximum 10 days. But if you stay on top of it, then you can still close a VA. Like right now, we can close a VA loan in 18 days. And I stand behind an 18-day VA loan close. And that's just as fast as most lenders can even close conventional and FHA.
And that's amazing, Bart. And I think I think we get so in the moment of thinking 10 days, 8 days, let's go back 5 years, right? Let's step back a minute and go, if a VA was closing deals in 10 days now, if we said 10 days 5 years ago, I mean, people have been like, this is amazing, because historically, usually your average closing is 45 days, 30 to 45 days.
Right now, most lenders are quoting 45 to 63 days.
Yeah. So, I mean, if we're doing that, there's a lot of loans out there too, but yeah, as we're doing that, that's a great turnaround time period. So 10 days, we can't say, oh, well, that's going to be really stringent. No, I think that's completely fair. They've been very transparent working with them. Working with their underwriters as well in my past. So, I think overall, we just need, as a society, as we think it's speed, let's step back and think about, hey, let's put some due diligence on this. Let's make sure that we're getting the right product and the home is in the right condition to sell. And sometimes I think we're overlooked at that a lot. And I've seen that a lot lately. Just in some other threads and other posts that I follow where, hey, I don't want to give 0 days due diligence. And I'm like, well, if we look at buyer beware, and look at what's actually happening, if you look at just the state of California where the buyer beware is 3 days on any contract, and I think it's probably, and that's probably average throughout the nation, but, just kind of talking real estate wise, I think giving somebody 3 days of a cool down period to go, let's give us the right to inspect. Let's do our due diligence to make sure this is the right home. It's hard for somebody to say, I'm going to walk in this house for 15 minutes and I want to place an offer and buy it. Well, do we know what the neighbor's dog does at 4 a.m? Do we know, what are their creaks and crannies? Let's get in there and see the house. So, giving people time, I think, is still having that touch there that, is still needed. But I think
you lean towards the word integrity, and me and you've talked about that before. I think you lean towards the word integrity, and it's, trust me, I'm fully vetted and aware of everything that's going on in the market. The 75 to 150 people that are in a showings on the weekends, and the houses that are highly desired, and 60, 70 offers coming in. And I get all that, and our business has definitely adjusted, as most people's. Yep. We can all say, I think everybody, both realtors and lenders, can say we're doing things now that we never thought we would do 2 years ago. But I always try to push as much as I can to remember, and this is something that a conversation I have with all my agents, is that we still have our integrity to come back to, because this market of this period of insanity, while we all thought it's going to end sooner than later, and it looks like it's still going to continue for a while, it will end eventually. And then what will be left? What will be left? Well, will our reputation is saying, hey, we'll do anything and everything to get paid, be left, or will we still have the fact that, listen, we know that it takes zero financing and zero appraisal and offering 85 over and no due diligence to get an offer accepted. But is that at some point we have to understand we are paid to protect our clients. So like, right. What does that look like?
Yeah. And I completely agree with that. And it's kind of, hey, there's business sense of, hey, we have a strategy in place. We're going to get this. But at the same time, we need to have those checks and balances there to say, hey, is this the right thing? Because at the end of the day, in 2 years from now, I sold someone a property and it wasn't the right way of doing it. Are they going to call me back? And do I feel okay of going, wow, we did this? I mean, your integrity is on the line. Once you validate, you break your integrity, it's really, you're kind of stepping yourself out of the industry and into something else, because that's the one thing that you have, right? We can't control the market. You can't control what's going to happen. You can adjust and pivot and give the best information possible, but you never break your integrity, because that's the one thing you do control.
Yep, 100%. On the same page, my friend.
Awesome. Bart, I know this one went a little bit longer, and I think I greatly appreciate the conversation. I greatly appreciate the information that you shared with us today. And I guess, Bart, I'll add your information into the stream here in a minute. But I appreciate your time today. Thank you, everybody, for watching. If you have any questions, reach out to Bart, reach out to myself. We'll be more than happy to point you in the right direction and find exactly what you're looking for. All right. Have a great day.
Thanks, Rich. You too.